The next 3 or 4 weeks is going to be incredibly interesting as far as financial markets are concerned. There's an unusual number of major risk events, many of which could actually come to the fore over the course of the next few weeks, whether that is the US presidential election carrying that extra level of uncertainty this year due to the postal voting, due to Donald Trump's previous indication that he may challenge the results if they're not in his favor. We have Brexit, of course, which is meant to be meeting a deadline of this week, but even that now looks to have been pushed back towards the end of the month. We're also now entering the period when many of these companies who have engaged in stage 3 trials of the coronavirus vaccine, when there's been touted that we could see an announcement, although there has been various setbacks along the way more recently. But over the course of the next month, things may start to become a lot more clear as to when we can expect a vaccine to come to the broader market. There's also US fiscal stimulus, Congress continuing to be locked in talks or seemingly getting no closer. On top of that, we have earnings season, which kicked off yesterday. So, like I say, a number of high-profile, high-level, major risk events all influencing the markets all at the same time, and against the backdrop of more restrictions being imposed around the globe as COVID spreads. Once again, here in the UK, we're seeing much more restrictive measures being imposed across the country, particularly in Liverpool, for example. And I think the rest of the country is only a matter of time before we see higher levels of restrictions as well. We're seeing similar actions being taken across Europe, and COVID cases in the US starting to spike also. All of this is going to be a major factor in terms of how market sentiment is driven and how many of these currency pairs and commodities, etc., do trade over the course of the coming weeks. The one we've chosen to focus on today is the pound versus the US dollar. There's so much happening which is going to influence this currency pair now over the next few weeks. I think it is going to be a really interesting one to watch. The most obvious being Brexit. Now, as I said earlier, the deadline that was initially set for a deal to be struck between London and Brussels was Thursday this week. That's when the EU summit takes place, and they were expected to put forward the deal that had been reached between the UK and the EU. But it seems that we're still short on a couple of key areas, the most obvious being fishing rights and level playing field. So already we've seen signs over the course of the last couple of weeks that the EU is willing to push this back to the end of the month as long as they have a broad outline of an agreement this week. And it seems today someone close to the talks or to Boris Johnson has suggested that Boris Johnson himself is willing to effectively see this week as a soft deadline and happy to continue talking over the next couple of weeks. No one should be surprised about this. We've seen this plenty over the last 4 years. All deadlines put forward by both sides are always soft deadlines that can always be pushed back. The only important deadline, of course, that we know is firm is the end of this year, which is when the UK exits the transition agreement. But so far, we haven't seen too much volatility in the pound that you would typically expect ahead of a potential no-deal Brexit, whether that's complacency or whether that is confidence that is both sustainable and justified. I guess we'll see over the course of the next few weeks. I do feel like there's a lot of confidence in this, so the major risks are to the downside as far as the pound is concerned. But you can see that confidence is growing. I'm probably in the confident group. I do think a deal is going to be struck. I think talks collapsing this late in the day would be catastrophic. And as we approach the 132, 130, 131, 132 levels, these are the key levels for me. This is where we're seeing fib levels being taken out. 132 would represent a break of both the 50 and the 61.8 fib level, a break of that rising trend line, which we broke below not too long ago, and would signify to me that markets are very confident of a deal being struck. The other major factor we have to take into consideration here is the US dollar as a risk-averse instrument. And given how much downside risk there is for these markets right now and potential upside risks, it's worth noting the dollar, I imagine, is going to continue to be extremely volatile. And if we see significant risk aversion, that will lend very favorably to the US dollar. So something certainly to keep a very close eye on.